Goldboro LNG project in Nova Scotia. They recently completed the acquisition of a major acquisition of Shell Canada's Foothills natural gas assets. So we want to hear about that today. But I'll hand it over to Al for a few minutes and perhaps give us a brief overview of Pieridae Energy and perhaps yourself as well. I know you've been involved in some really interesting projects in North America on the LNG side, so we'd like to hear about that as well. But thanks for joining us today, Alf, and take it away.
Okay, well, thank you for inviting us. We much appreciate it. So Pieridae is a roughly about 8-year-old company. Kind of came out of the second round of us trying to build an LNG project as a team. If anything, our claim to fame is we kind of restarted the LNG business in Canada back in 2004 with our first project in Kitimat, and today owned by Chevron, and Chevron's trying to sell it, so we will buy it back just for laughs. We started Goldboro in 2012, and it's an LNG project on the east coast of Canada, primarily designed to bring Canadian gas into the European Union. The whole idea of our new company has been to build an integrated natural gas company that basically produces its own LNG, natural gas, transports it to the LNG facility, turns it into a liquid, and then transports it into the marketplace across the ocean. From a perspective of what Goldboro looks like, it's a 2-train, 10 metric ton facility located in a little town called Goldboro. One of, I'd say, our key tenets of our business is to reuse, recycle, repurpose existing assets. So Goldboro is a very good example of that. It's the beginning of the Maritimes Northeast Pipeline, which was originally built to bring Sable offshore gas onshore and into the U.S. With the Marcellus growing as fast as it did, that pipeline has basically become irrelevant in the marketplace today. But for us, it's our connection to the natural gas market in North America. Once it's already been turned around, but as it was designed to be bidirectional, it gives us access to roughly about 1.2 BCF a day of capacity that we can connect to the TransCanada system, and that's how we work our way back to Western Canada. As we just mentioned, we have recently acquired the Foothills lands of Shell. Originally, about a year or so ago, we merged with Akuma. And today we have roughly about 1 million acres of land stretching from just south of Grand Prairie down to the U.S. border. We also are a good-sized midstream business. In fact, we have 3 deep-cut gas plants, one at Waterton, one at Jumping Pound, which you might have driven by just as you were coming out here, and the third one at Caroline. And we also own half of the Stolberg gas plant just further north of that. So between all those gas plants, we have enough capacity to fill our first train of gas. We're doing about 225 million a day of production right now, and we intend to grow that to roughly about 800 million a day. And probably the single biggest part from a financing perspective, our full train, or the first train, was sold to the German utility Uniper, which, if you go back in time, was originally Ruhrgas, so the single larger distributor of natural gas in Germany, and one of the top 3 distributors of gas within the entire Western European marketplace. For us, Uniper acts as like a one-stop shop. They are able to take gas into the United Kingdom, Germany obviously, Spain and Italy, which gives us an opportunity to sell to the entire European Union through one organization. When you look back to where the LNG terminal is right now, it is fully permitted. It is construction ready. We actually hold our construction permit, and sort of the rest of this year will be used to put the financing in place of roughly about $10 billion. As I said, half of that, about $4.5 billion, guarantee from the government to Germany. That leaves roughly about $5.5 billion to round up over the next 8 to 10 months as we move towards the final investment decisions. So when we look at risks to the project that remain out there, the single big one is probably access to funding, that where the marketplace remains open enough in order to raise that type of funding. And the second one is to get the funding in place is the open book estimate, which is the final construction price. We will hopefully get that sometimes towards the end of the year, and depending on how that number looks is what will allow the funding to occur. So as a business, we are a cash flowing business now. We were about 18 months ago. There were 15 of us. Today there's just over 300, so we've changed significantly, and we expect for 2020 to be roughly about 100 million of EBITDA for the year. So that's kind of us in a nutshell.
Terrific. Well, that was a great introduction. Thank you. I guess, first of all, I just wanted to touch on the Shell Canada acquisition, which closed in November, and I imagine that had to be a pretty major integration process. So maybe just give us an update on how that's going, and what have been some of the the key things that you guys have had to get wrapped up as you closed the Shell acquisition here. So.
Well, I think the one good thing, it took a while to raise the money to buy it, but it gave us plenty of time to get ready, and I think Shell was particularly concerned that we would be able to take on the task at hand. So one of the very good things was that by the time the turnover of assets occurred in the middle of October, we were well prepared to do that. So we've had very few hiccups. Actually, the assets have been performing exceptionally well, even through the cold period of a couple of weeks back. We've lost very little production during that period of time. Right now, we're preparing for the mandated turnaround of a jumping pound, and that skill set that came with the individuals, because we still picked up roughly about 200 employees from Shell, so we haven't lost a lot of the intellectual capital that came with the assets. So it's been relatively smooth. As I would say, production has been at the very top end of what we expected it to be, and the integration into our legacy assets has been relatively smooth, and one of the principal reasons why is the individual who's now our Vice President of Production, Carolyn Helmond, she came from Shell, and it's really allowed for a relatively seamless takeover of the assets.
Good, and I think we had a question here, so.
Now, not to ask a provocative question first thing in the morning, but there's word that both C&Q and Cenovus have opposed the transfer of the well licenses from Shell to you. Can you comment on that?
Well, I think, obviously we know about that. I think Cenovus we've taken care of, but CNRL has its own position. Certainly, I think from our position, we expect the deposits that Shell had to put with the government will remain. They may increase. That's probably the single biggest risk, I would say, is whatever that financial deposit is going to be, is how that will be eventually handled. And I think, I understand the issues that they're talking about, and I think this industry in the past has tended to have the operator carry the burden, and we're going to share the burden with our partners in these facilities. So I think, as I said, the ultimate, whatever the deposit is that is required by the government, that's probably how it's going to be resolved, I would think. It's more than likely going to go to a hearing, and we're prepared for that, and Shell is prepared to ensure that the transfer continues. I think it's virtually impossible to unwind it now, so but there will be a financial settlement, I would think, of some sort.
Good, and just continuing on the Shell Canada acquisition, you mentioned that you brought 200 people aboard, so I mean, I have to think that there's a lot of, like you said, human capital that has come with the acquisition. So can you just talk about the skill set that the Shell employees have brought to bear with Pieridae, and how you guys are starting to benefit from that?
Well, we picked up, I would say, the key skill set is probably, I'd say about 25, 30 engineers, all of which have probably ranged anywhere from a minimum of 10 years post-university training to probably close to 30. One of the big advantages we're taking of their skill set is to try and take some of those people and actually have them work on our LNG project. One of the projects that Shell had been working on prior to the crash of the price of oil back in 14-15 was they were looking at building a inland LNG facility at Jumping Pound, and as a result, a lot of those engineers had a lot to do with the LNG side of things, and we've been moving quite a few of them over to the project such that we take advantage of their skill sets on the LNG side. And what that's done for the project is going Goldboro itself has really been set up with a relatively small number of people and kind of using consultants as a valve that we could turn on, turn off, depending on when we had funding to do things. What we're really doing now is reducing the amount of third-party consulting and replacing it with some of the people from Shell.
Oh, good.
So that's worked out quite well for us from that perspective.
And what about your capital budget this year? So you guys have press released a budget of $32 million. I was just wondering how much of that is dedicated to the upstream, and are you guys going to be drilling some new wells this year? Do you expect to keep production flat? Could you maybe just touch on that a little bit?
So that's our original plan, is we'll use the majority of the funding to keep the production at roughly about 43,000 barrels per day. We have I'd say relatively low-cost options with the existing assets from Shell and some from our legacy assets that we can take some of that funding. We haven't exactly decided. We want to try and ensure that all the plants are full. So how we, because we have roughly about 45 million a year of third-party income that comes from the three facilities. So trying to maximize the capacity at all three is kind of our first goal, and then trying to take wherever we can use our dollars most effectively to keep the gas plants full. So, for example, we're working on a relatively small project down at Waterton to improve the straddle. Waterton effectively is the same thing Empress is on the other side. And for relatively small investment, a couple $1 million, I don't think it's that much now, maybe less than $1 million, we can actually extract more of the liquids out of the gas stream. So those are kind of the things we're going to do in 2020. It's kind of low-hanging fruit that keeps the production level and relatively low-risk drilling so that we don't risk capital in any way.
Okay. And then just kind of tying that into a discussion of how you guys plan to supply the Goldboro project, am I correct in assuming that you're going to be physically connected basically from the foothills all the way to Nova Scotia? Like, is there any need to source gas from other places? I think that you guys have talked in the past about perhaps tying in Marcellus gas. How does the pipeline connection work from Western Canada all the way to Nova Scotia?
If you were to think about Canada, if today the LNG terminal existed, we could move roughly about 450 million from Empress all the way to Goldboro. It's already all connected together. The path across Canada is all the way to just east of Montreal, crosses into the United States onto PNGTS, over to Maritimes, and then back up to Goldboro. What we need to do is there is on the U.S. side some additional compression and looping that they will do on the pipeline to increase the capacity to roughly about 800 million a day. And where our real bottleneck is on Maritimes. So when Maritimes was built back in 99, 2000, it originally was a mobile project and was designed as a 30-inch pipe from Goldboro all the way to Dracut. And when Exxon bought Mobil, they were nearly as bullish on Sable as Mobil was, and the U.S. part was narrowed down to a 24-inch pipe. So it's really that differential in pipe size that acts as a bottleneck for our project from bringing gas from the west or from the Marcellus. So Marcellus really isn't an option for us on a long-term basis. It could be used to fill in on an interruptible basis. So when we look to how the second train is going to be filled, it's more than likely going to be a solution north of the border. And right now we have about 40,000 acres in New Brunswick that are all gas-prone lands, and that's right off the Maritimes system. And one of the other things that we're looking at right now is to take advantage of all the gas that's been re-injected in Newfoundland. And Enbridge actually has a project that they already had done quite a bit of work on to bring, at the time, gas from Newfoundland past Goldboro and into the Boston market. And that project kind of died when the Marcellus grew to whatever it is now, 30 BCF a day. And but it's also a very cheap source of gas that could come to the second train. So more than likely, that's how the second train is going to get filled. The first train, when people ask us, how can the distance factor of Western Canada so far away from Nova Scotia versus the Marcellus kind of in this back door, basically the transaction we negotiated with TransCanada was to eliminate the distance factor, and that's really the easiest way to think about it. Was about maybe 3 years ago already when we approached TransCanada. So, TransCanada was moving about 6 Bs a day prior to the Marcellus kind of gobbling up all the market, and really taking advantage of that excess capacity that's on their system, and coming up with a rate that effectively makes the transportation equal. And the thing about the Marcellus is that moving gas from west to east is actually quite a difficult proposition. And to kind of put that a little bit in context, we had worked with Kinder Morgan very early in the project to try and build a pipeline from a place called Wright, New York, which is kind of right where the beginning of the Marcellus is, to Drake, Massachusetts, and just building a 300-mile pipeline over the northern part of Massachusetts. And at the same time, Kinder Morgan was working on Trans Mountain, and in the end, they decided Trans Mountain was the easier project to permit. So it just gives you an idea of how hard it is to build a pipeline in the Northeast. And that is one of the reasons we started looking at Western Canada. And the other principal reason is the acquisition cost of reserves. So when we talk about the Shell transaction we just did, we acquired those reserves for about $6,800 a flowing barrel Canadian. To do the exact same transaction, the Marcellus probably would have cost us about $25,000 US a flowing barrel. So you can see we built a much more significant cost advantage from an acquisition of gas supply perspective than we could have done out of the Marcellus, and then it would have cost us exactly the same amount of money to move it into the marketplace. So from an overall landed price at Goldboro, we still are better off out of Western Canada than we are out of the Marcellus.
Okay. Go ahead, John.
Alfred, unless my LinkedIn profile lies to me, you were obviously in Ottawa on Monday meeting with our Natural Resources Minister. Can you just give any color on what your conversations with the federal government are like in terms of support for the project, and maybe whether you're looking for any partnership out of them at all?
Well, I think we've been talking to the federal and the provincial government a lot over the last year, and I don't think you have to be a rocket scientist to figure out that Pieridae's not a very large organization, and trying to do a very big project. Sort of compare it to Canada LNG, they've got 5 very large partners building that in comparison to we are, so it looks a little bit weird in that regard. And one of the asks that we've made of the federal government is to be more actively involved in our project. As I mentioned earlier, the German piece of our project is very important to getting the project done, and it's been a problem for us, I would say. Maybe is not the right word, but the government of Germany's always wondered, like, well, if this is so important to Canada, where is the Canadian government? And so over the last 8 or so years, as we've talked with a variety of different ministries or ministers as they've come and gone, trying to get somebody actively involved has been a difficult task. And I think that Minister Reagan has certainly shown a significant interest. Perhaps when the last minister was from Edmonton and didn't seem to care at all. And I think the fact that this is an Atlantic Canada project, it's a big project for Atlantic Canada, that he's shown significant interest. And our ask of the federal government has really been to solidify that relationship with an ally that, as I said to the minister, Canada's never going to have the problems with Germany that we have with China, and the fact that we're so focused on trying to sell off the west coast to China that the Germans are they're a stronger ally. They're a central part of the European Union and the CETA agreement, and we kind of check a lot of boxes from that perspective. And our ask of the government is really just to treat us the way they've treated Canada LNG. And there is a financial ask, and it's really not nearly as large as the government of Germany has offered to us, but something to show some support from the government that allows the government of Germany to be somewhat assured that this project is going to reach the front finish line.
Maybe just one follow-up. How do you think about managing your production profile longer term, say over the next 4 or 5 years? Because realistically, if everything went according to plan, I guess it would be, 2025 for first gas type of thing?
That's probably optimistic, but that's what we're aim for the first quarter of 25. So I think obviously as a company we have two issues we're dealing with. How do we survive through a very there's you can sort of see what's happening on the NYMEX right now, that there are the natural gas industry in North America is under a lot of strain. The LNG industry on a worldwide, or natural gas prices on a international basis are also quite low right now. So trying to ensure that we can maintain our economics is important, and it's one of the advantages of these big assets is the fact that the marginal cost of production significantly lower than what we had with Akuma. Between the two of them, we actually have a lot of good synergies, and so but it is probably the key thing for us right now is trying to keep the LNG project going forward while we manage that economic risk during the 4 years of construction.
Yeah, and I guess just to follow up on global LNG prices, I mean, that's been very topical this year, is weakness in global LNG pricing, and I think there was even some headlines earlier this week that the Indian government is talking to Qatar about potentially renegotiating their contracted price lower. So I guess just with that in mind, I mean, where does the Goldboro project fit into what appears to be, an oversupplied market globally, and, how do you guys balance that risk as well?
Well, I think where the price is going to have most effect on us is certainly financing. When you look at the long-term demand supply curves, 24, 26, the market will move towards a more balanced or short position. So aiming for that is a good thing. Convincing people that the price will move when it's at $5, and more than likely, I think this summer, the price dislocation could get significantly worse. And the principal reason for that is that the only two places in the world where there is vapor storage is North America and Europe. And so to store LNG from summer to winter is an expensive proposition. On Earth, natural gas wants to be a vapor, so it's always trying to turn back into a vapor. And so you lose a lot of product storing it in tanks. And as a result of that, what you've got is some severe dislocation of supply-demand in the shoulder months. And I think that's probably not going to go away for a while. And so if you saw last summer, LNG from all over the world was coming to Europe and began to lower the price of natural gas in Europe as the natural gas reservoirs started to fill up. And so I think one of the only things that mitigated that was the fact that the Dutch are now in a serious decline in the Groningen field. So I think this next summer coming up could be even worse from a pricing perspective, and I think that might have a bigger impact on our ability to finance that. People, I wouldn't be surprised to see $3 to $4 LNG, and what that could lead to, particularly in the Gulf Coast, is the fact that all these projects that were financed, I know you guys have a big position there, so I won't go too negative, basically what you've seen with the Indians trying to renegotiate, I wouldn't be surprised to see the same thing in the Gulf Coast, that these long-term tolls that are so far out of the money now that you might see that occur as well. And for us, it's different because we have a different structure, but it will affect the ability to finance. There's no doubt in my mind that the recency effect of pricing will have an absolute impact on the ability to finance it, and whether people can look beyond the current supply-demand curves. That's a good question. Don't really have a good answer for that right now.
And just, not to put too fine a point on it, but I mean, how do we need to think about the break-even cost of supply for you to make the project work? I mean, what price do you need in Europe to make Goldboro go ahead?
So we are roughly just shy of $8. And so if that's very comparable to what Shell has at Kitimat, and I think they said roughly at $8.50 they earn around 10-12% rate of return. So we're our return's a bit better at about 15, and we're just shy of $8. So it's a number that we talk about quite a bit. There's no doubt that it's very hyperbolic because the volumes are so big. As the price goes from $8 to $9, because we own the chain all the way back to the field, it's very hyperbolic. And by that, the time, I think the marketplace will be very different. And kind of one of our views of the whole natural gas, worldwide natural gas market is very much that we're moving more to a short-term, transparent, converged price. So whether you're talking about delivering to Japan or delivering to South America or Europe or wherever, basically it's the same price, and who can get there cheapest, it gets the most margin sort of scenario. And that's why Goldboro is a really excellent location to build this thing, because from a distance perspective to the European market, we're the closest LNG terminal. And even going to South America, we're still much closer than the Gulf Coast. And the guys from Uniper used to say, you should bring a globe with you, because when you look at the globe, you can see how far out into the ocean Nova Scotia really truly is, and that the actual, we're just on where the earth starts to curve. So you get an absolute shipping advantage that over the Gulf Coast. And I think that ultimately is going to be, when you look at a 20-year, 30-year horizon, our biggest advantage is the fact that where we sit gives us a shipping advantage, and the price is going to be the same price whether you're in the East, the Far East, the Middle East, or Europe. And I think that's really our biggest sales opportunity, is to explain people the location itself is what's going to be the long-term advantage.
All right, and you touched on this a little bit, but obviously there's a thriving LNG industry south of the border. So I was just wondering, when you look at your U.S. listed comparables, what are some of the takeaways that you see from the publicly traded U.S. LNG guys, and how do those valuations, provide some read-through to Pieridae?
Well, there's only two others, really. Well, three, I guess. Cheniere Operating, Next Decade, and Tellurian both trade on the NASDAQ. We'd be very happy at 3/4 of their valuation. So I think take Tellurian, I just think it's over $1.5 billion, somewhere in around there. And you sort of compare the two companies, we are a significantly different business, and not only are we a much larger producer, a much larger midstream business, we also have a fully developed LNG project. So, and it's one of the principal reasons we're going to move. We're moving from the venture to the bigger exchange, to the TSX, is to try and broaden our capability from an investor perspective. And because when you look at the companies that are out there, Next Decade ourselves, that those other two companies, neither one of them has a customer, neither one of them has finished their engineering, and I think they're just both on the cusp of getting their permitting. But there's no doubt that they are much further behind than we are, and but have a significantly greater valuation, and whether that's Canadian-U.S. thing or whatever it might be, but there is no doubt that there's a significant dislocation, and the efficient market capital thesis is not being proven very well.
I think we just have time for one more question, but you referenced we're hoping to reach FID on Goldboro later this year. So could you just give us an idea of the sequence of events that has to happen to get to FID this year, and then perhaps what happens in the immediate aftermath of FID?
The first is the completion of the open book estimate. That will take roughly about 8 months. Right now, KBR replaced CB&I late November of 18, and they have, I guess, we decided to replace them in 18. We replaced them in the beginning of 19. How that process is, we're working on right now. What we don't want to do is spend $8 to $10 million to get to an open book estimate and then not be able to raise the money, because we'll get roughly about 90 days post FID, so to hit the number. So we're right now is just really kind of looking to see what the government of Canada will do. That's probably the first thing we need to figure out, because that affects how we deal with the two pipelines. And we have a significant amount of capital that we have to somehow put into TransCanada's and Maritime Northeast pocket, and that capital for us is going to be very expensive. So that's the ask we have of the government, and that's probably going to be the one thing that will be the gating item before we start the open book estimate. So that's what we're kind of looking at the fourth quarter right now, and depending on how the discussion goes over the next few weeks, we'll have a better idea of exactly how it's going to pan out.
Good. Well, I see that we're out of time, but I certainly appreciate you joining us today. I thought that was a great update, and hope you enjoy the conference.